You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. Welcome back to TWIFO, This Week in Futures Options, a program here on the old network where we break down the hot happenings in the other side of the fence. Maybe some ags, maybe some indices, maybe some metals, crude, all that fun stuff. Lean hog, swirl it all together. You got the tasty cocktail that is TWIFO. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the Options Insider Radio Network. If you're new to TWIFO, first off, welcome. Secondly, hey, hit up the archives over there at theoptionsinsider.com. Easiest way to sink your teeth into what was traded in recent weeks. A lot of great questions you guys filter into. Those are all on the show there as well. Check them out if you are so inclined. A lot of good stuff. Of course, you can always find it in all your favorite podcast providers, iTunes, TuneIn, Stitcher, Pocket Cast, etc., so on and so forth. Also via our mobile app available for iOS, Android, and the beloved Fire OS. Just search for Options Insider Radio Network. And of course, however you listen, make sure you hit us up with those questions. You guys are really the fuel for the fire that is TWIFO. And of course, while you're listening, head on over to cmegroup.com/TWIFO. this week in futures options. You can do that any time of the week, of course, not even while you're listening to the show, because it's a great resource for you guys, and it's completely free. You get access to all those great charts and cool reports that Nick and I are always talking about here on the show. But we have an extra cool nugget, extra cool carrot for those of you who can join us live every Friday, 1:30 p.m. Central, 2:30 p.m. Eastern via Mixlr, because that's when the reports are also live, as in the links are clickable. So you see what, let's say that I'm looking at a product that shall be unnamed. We'll talk about it in a little bit, a surprise, and look at the 17.5 call. So I click on that, and bam, gives me the whole month of what exactly traded, not just in that strike, but every other strike. You can do that yourselves too. If you tune in Friday, 1:30 p.m. Central, 2:30 p.m. Eastern, you can always get the reports after the fact, and they're all still really cool. They just don't have that clickable link live. So a little carrot, a little nugget for you hardcores out there who can make it for the live TWIFO. And joining me on this live TWIFO, as always, my futures options partner in crime, the yin to my yang, Mr. Nick Howard, the founder of Bantix Technologies and the creator of a little platform we like to use around here quite a bit called Quick Strike. Mr. Nick, welcome back to TWIFO, sir.
Hey, good afternoon. Nice day outside in Chicago here, so looking forward to an hour from now when I will be wrapping it up for the day.
There we go. That's the exciting way we love to start the show. Looking forward to it being over. There we go. Everyone just tune out now, because we're only looking forward to when the show is done. No, of course, it is a beautiful day. Beautiful day to be inside recording some radio, because that's exactly what we're doing. So let's get right to it. I mentioned at the start of the show, listeners, that there were some interesting products we're going to talk about today, and we're going to get to it just that. We always start in the realm of crude, and we'll get to our friend WTI. He shan't be forgotten today, that is for sure. But we're going to mix things up a little bit today. We're going to start things off actually in the metals. And in the metal, we don't get a chance to talk about too often, which is silver. So all you out there who hunt the things that go bump in the night, we got you covered on the show today. Yeah, an interesting week out there in silver. The futures, after a little bit of sturm and drag, a little bit of sell-off, a little bit of retracement, ended up slightly up on the week for the most part, up about a quarter of a point, so right around 1%. Up there on the week. So not a bad week net overall for all you silver lovers out there. Looking at the vol this week, it's kind of been a bit of a mixed bag. Vol kind of unched this week as well, as you saw a little bit of hither and yon, will they, won't they, out there in the underlying this week, and that's always raises the question mark. When we ended up rallying a little bit, looks like the vol slightly up, ever so slightly, but really nothing to write home about except in the front month, which we know that isn't really vol. That's pretty much just gamma at this point. Interesting stuff. I'll let Nick get into the skew out there in a minute. Let's see what was lighting it up this week. A fairly active week. Open interest up about 2% overall, and the lion's share of that volume about almost 75% coming in that front month July contract. That's where everybody wants to play out here in good old silver. You guys can see for yourself if you play around with that report. You see that drop down at the top says expirations. You can click on some other contracts. I like to add longer term. You can add the weeklies, whatever floats your boat, and then you get a nice holistic view of all the different contracts out there. And if you do that, you'll see that July is number one with a bullet, and the number one hot strike out there in silver options for this week was the July 17.5 call. So pretty much the at-the-money call. Not a huge surprise there, lighting it up to the tune of about 1,656 contracts. Good chunk of that opening on the week. The lion's share coming on Wednesday. Again, this was an abbreviated holiday week, listeners, so no action out there on Monday. About 500 contracts going up on Wednesday, so about a little more than a third. 500 again today as well, so those being the two big leading days out there, about 2/3 of the volume coming in those two sessions. A good chunk of that opening. Then we fall off a little bit to the 1775, so a little bit higher, a little bit more out of the money call, doing about 1,400 contracts, again about 500 on Wednesday. Almost similar numbers, maybe a little bit of a vertical going up there, 17.5, 75. We'll have to dig into that a little bit. 512 on the 17.5s, 517 on the 1775s, both on Wednesday. So interesting numbers out there. The calls getting some love, followed by the $18 calls out there as well. So nice little call strip, 17.5, 17.75, $18. Nice little call strip out there, lighting it up out there in silver this week with about 1,100 of those. The lion's share again coming on Wednesday being the big action day for silver, about 400, about a third of those closing, and then a similar number going up. Wasn't all calls, mostly calls, but it wasn't all calls all the time, listeners. It was some puts lighting it up as well to the tune of about 1,100 of the 17 puts lighting it up. So if you're a silver bear, have no fear. There were some players out there as well, including about a little more than half, about 650 or so, lighting it up on Thursday as well, about 130 of those opening. So some back and forth paper on a lot of these tracks, which is to be expected when you're near at the money in the front month. A lot of churn, a lot of trade going back and forth. Once you get outside of the front month, it does kind of fall off a bit. Usually when we look at the metals, we like to see some sparks of life out there in the far off months, but we didn't really see a huge ton of that out there this week as well. No, like we've talked about in gold in the past, no upside calls trading in 2018 of December or anything along those lines. Also, not a lot really lighting it up out there in the weeklies really to speak of. It's not a lot of silver love out there in the weeklies. Mr. Nick, it's been an interesting week to watch from a vol perspective. What were you seeing out there? I know the skew was kind of coming on your radar, and you guys, if you aren't following Nick at QuickStrike1, no C over there on Twitter, he gets a lot of these charts out throughout the week, and he's tweeting charts all the time about different things. And I saw quite a few silver charts coming out for you, including silver skew this week, Nick. So what was catching your eye out there from a silver volatility skew perspective?
Yeah, since it was kind of slow, I wanted to see if there was anything else interesting going on in some of the products that we've touched on in the past, but haven't necessarily spent a great deal of time on in general. So given when I looked at the just performance for today, and I saw that platinum was up quite a bit, and I think we should touch a couple minutes on platinum too, because there's some interesting things there as well. I went through all of the metals and took a closer look at the silver. And I guess what I'm seeing there that I thought was fairly interesting, if anybody's following along, or if you're listening to this and then looking at the report while you're listening to it, this report will pretty much how it looks right now will be what it looks like all the way through Sunday at 5 p.m. I noticed that we had the calls get much richer in comparison to the puts this week, and at the money volatility is it's up about a vol, like Mark said, and right inside of 30 we start to really be leery of talking about volatility itself because of the way the market starts to move as you have decay and move toward expiration. But just in general, if you look at the quick skew column, you're going to see calls are rich and puts are cheap to the at the money, and we saw that they got richer this week across the board, the calls did, and the puts kind of stayed pretty flat. So we had a little bit of a steepening of a curve on the upside. And it's interesting given the way that the market dropped off yesterday for the most part and then came back up again. But that call richness came in the midst of the futures drop yesterday. But what I did tweet out was a July quick skew. And what you are able to see there is you see that the calls and puts over the last period of time, 3 months or so, and I think this is a general thing with the silver and the gold, is that the calls and puts flip-flop back and forth between richness and cheapness. So that's always an interesting indicator for me to look at something that is tradable. You're seeing opportunities where in a fairly tight futures range, you're seeing the 25 delta call and put, in this case, was what we're tracking publicly on here. If you are on the live version of this, you can change the delta that you're looking at, not just the 25 delta, but you see that it flip-flops back and forth. So you see sort of the vol curve tilt back and forth just based on, movement in the future. But the reality is, if you look, from a percentage standpoint, I guess it's a decent move in the future, but it's really not that tremendous of a move in the future. So you're looking at a $1.50 range. We'll have this vol curve tilt back and forth. So I just wanted to put that out there. I thought we should talk about it, just given the fact that even though this is a fairly lightly traded contract, we had increased open interest this week, and there was about 20,000 plus of volume, an increase of 5,000 in open interest, or about like I said, 4%. But and I checked out the markets too when I started to say, I go, okay, let's take a look and see how tight. And the markets are tight too, so silver might be a place for people to take a look in trading it alongside or in lieu of or as a start to gold if you want to get involved in the metal. So, take a look at pay attention to what that vol curve looks like. And as you can, try to get in there and take a look at the quick skew. And I think you find some interesting things with the way the vol curve is tilting back and forth, like a teeter-totter around what looks like the 17 level in the futures.
silver vol skew teeter totter. I like that. I like that analogy, sir. You're getting
I'm
good.
going to put a trademark next to that, please.
There you go. You're getting good painting pictures with your words, just like you've been doing this for a little bit or something. I'm glad to see all my tutelage has paid off, sir. But, speaking of surprise products, let's keep it in the metals for a minute. Our surprise product this week is something I don't think we've ever talked about on the show before, hence our surprise. And also surprising what we saw, or perhaps I should say really didn't see out here in this name, but still worthy of note. We're keeping it in the metal space. We're getting deep down the rabbit hole. We talked copper, talked gold a bunch of times. Never really talked platinum on the show before, so we're going to do that right now. Platinum, our surprise product of the week here on TWIFO. And, a lot of things are surprising about this. First off, pretty aggressive sell-off to net on the week. Off net on the week. Again, this is total on the week. There was some vacillation on the week, but week to week, as we look at on the report here in TWIFO, which you can do, cmegroup.com/TWIFO, off about 10 handles, so nearly 10%, about 9 and change percent out there. Actually, about 1%, excuse me, about 9 handles and change or so. So, yeah, about 1%. So, yeah, interesting sell-off out there, net on the week in platinum, and also seeing the vol kind of creeping up a little bit. Again, it depends where you're looking on the term structure, but in the nearer portion of that term structure, the vol was extremely rich, up about 1.5 or so, and about a point a few months out. What's more surprising, though, than any of this other stuff, really, is just the complete dearth of any real options activity out here whatsoever. I think we saw about 538 odd contracts going up out here this week total. So not actually about 800 total, 834 total on the week. So then we're talking about single strikes in silver that did more than that. And certainly bigger products like WTI or the E-minis or the Eurodollars will do hundreds of thousands on one strike. So we're talking about a very nuanced and subtle product. But here, an interesting thing that we're not seeing a lot of play. Obviously, that's going to be translated in the spreads. They're probably going to be a little bit wider out here just because no one's really out there playing. What we did see, pretty much, if there was any sentiment out here, looks like the October 950 puts and the 9.5 calls. So maybe a 9.5 straddle, or perhaps a 9.5 conversion or reversal going up out here 250 times. Pretty much total, and that was pretty much it for the week. That was the lion's share. There was also 128 of the July par calls, 1,000 calls going up out there as well. That's really about it. So it's kind of a tale of almost two stories here, Nick, with this. It's our surprise product that it moved a lot. We saw a lot of vol, a lot of underlying activity. So the futures guys were in there. They were scalping away and doing their thing. But we didn't see the love there on the options. And, we see this a lot with the metals as you start to get further down the rabbit hole. I mean, platinum is a precious metal. It's also a production metal as well, so it's got a little bit of both. Unlike something like copper, which is 90% production. So it's really an interesting thing to kind of see how this thing just hasn't really caught on with the trading masses. Why do you think that is? I mean, we see gold lighting it up. You were talking about silver skew right now. Gold is another one that has a great evolving skew story. It's always something different almost every week, so there's a lot to attract you. A lot of volatility. There's certainly vol out here to be had. I mean, maybe it's kind of a little bit of a saga, kind of like we're seeing with the WTI weeklies, where it's just hard to get them to light a fire under that. First off, what caught your eye out here of little there was in platinum? And then B, why do you think platinum not lighting the fire under the options masses out there?
Not exactly sure why we're not seeing any activity, but I think what really caught my eye, you mentioned that we were down about $10 on the week, but when you look at what happened just today alone, so this week we started out around the 965 mark. We got hit the high around 965, and Tuesday was pretty flat, and then we had a big break on Wednesday. And then Thursday was a little bit of a, breakdown of 940. So right there, you're off $25 on the week, right? And then we rallied back up to 950 and then back down all the way down to 925 yesterday. And most of the day yesterday and most of the day today. And then I think on the number, we rallied back up $24. So that's a fairly significant, trading range when it comes to even a percentage standpoint as well. So it's a pretty good look at some opportunity, like you said, in the futures, but just really surprised. I mean, even the open interest numbers in the front contract, they're just small. So just another curiosity and something I really want to point out, just to kind of give our listeners an idea of where they might want to look for some potential opportunity, especially when you can, if you can get two $25 ranges in a week in a product, that's pretty good, no matter what the percentage is, because I think you're really getting some nice action out there. And I did take a look at those markets as well, and those markets aren't quite as tight as the silver. So if I had to pick my order of preference, I would probably go take a look at silver first and then the platinum. But if you're looking for some chance to run through a significant number of strikes, platinum might be some place to look as well, especially if you can get off a good trade in a reasonable price between the wider bid ask.
Speaking of good trades, let's move on to a name that is pretty much a frequent offender every week here on the show. You guys love it. You guys want us to talk about it. It is the Crude. We like to just give you guys, sometimes we like to take you in some other esoteric product categories, hence our surprise product this week. Platinum. Get in there. Look at it. Trade it up a little bit, maybe. We'll see some numbers on the show next week. It's always nice to have people always writing to us, too, saying, there's no volatility. VIX is anemic. There's no volatility in the equities and the indices. We'll get out there a little bit, get a little bit farther afield and start looking at some of these more esoteric products. There are opportunities out there if you're willing to look for them. I know a lot of you are looking at Crude, so we'll get into that right now as well. We were talking on recent shows. It was kind of the fallout from, I guess you can call it OPEC 2. OPEC 1 was the big meeting back in November. This was the follow-up to that. A lot of people thinking or hoping that OPEC was going to extend those cuts, and then not so much. They did, but not to the degree everyone was hoping for. So we saw a dramatic sell-off, of course, in recent weeks. So with Crude, then we saw a bit of a rebound. Bulls coming in. We saw some back and forth about U.S. supply numbers. First, U.S. oversupply was crushing the numbers. Then people were saying, well, the drawdown in U.S. supply is actually a little bit higher than they thought, so that caused a little bit of a rally. So we've seen all these kind of push and pull, will they, won't they forces at work out there in Crude, which makes it, quite frankly, an interesting one to watch for our show, and certainly for you guys out there who are slinging a lot of options every week. So getting over to the report, again, cmegroup.com/TWIFO. You too can see it for yourself, and you get a hankering for what was going on out there this week. Net on the week, the futures off about 2.5 handles, depending on where you look, again, out there in the term structure. So again, we're shy of that mythical, magical 50 handle. That seems to be where all the action is. And as we said before on the show, when you get shy of the 50 handle, usually we see vol creeping up. When you get north of it, you see vol coming off. And we kind of saw the former this week. Vol up about 1.5 to 2 points, depending on where you're looking out there in the term structure. A little bit longer, up about 2.5 points, actually. So nice little pump here for Crude vol. All of you guys who've been writing in for months saying, wither the Crude vol. Where can I find some Crude vol? Here you go. Got a nice little moment. The question, of course, always with the Crude vol, though, is can it stay? Can it last? Or is it kind of just event-driven risk right now? We're past the big OPEC meeting. We're past some of the U.S. production numbers. So maybe this is a little bit more systemic vol creeping back in. We'll see. If we can, of course, as always, if we continue this trend south of 50, then I think vol will be coming back to stay. If we start vacillating, get back north of that 50 handle, I think a lot of this green on the vol screen going to be coming off real quick. Looking at the net numbers here, was another strong week for WTI, adding about another 2.25% overall to the open interest out there, about 56,000 additional contracts this week. And where was all this love? A total of nearly 750,000 contracts going up this week. Where was the lion's share of the love? Well, once again, front month was where the action was. I'm going to pull up the weeklies too, just to add them to my mix, because I like to pay attention to those, see what's going on out there in the weeklies. But the front month was where the action was, just slightly over half, about 52% of the volume. So right around where it usually lands, sometimes a little bit higher, but usually it's at least that around that 50% level where the lion's share of the love was. And if you're saying, well, we broke that 50 handle, so I'm guessing 50 was the hot spot. Well, then you would be right. 50 handle once again out there in July, taking number one with a bullet spot out here in Crude for our hot strike out here this week, our hot option out here in Crude. 31,000 and change of these July 50 calls going up. Big chunk, about 11,000 going up on Wednesday, about 5,000 on Tuesday. Good chunks of those closing. So there was, as you might expect, given what was at that time pretty much an at-the-money strike, a lot of back and forth, a lot of opening and closing on this strike. Net OI was actually almost unched, so that's kind of interesting. So a lot of back and forth churn on the strike this week, including about nearly 8,000 going up today. So 7,700 both days, yesterday and today. So a lot of action on that 50 strike throughout the week, followed hot on its heels by the 47 puts. So we talked about that dance 50, usually it's 50-45, this week 50-47, about 31,000 almost of those going up this week as well. Again, Wednesday being the big driver, 13,000 and change, about 11,000 going up on Thursday, only 4,000 today. So the lion's share Wednesday and Thursday, about 23 to 24,000 of that almost 31,000 going up in those two sessions. And again, pretty much almost unched the OI as well on both of these strikes. So a lot of churn on both of these strikes, a lot of back and forth trading, which again indicates a pretty healthy market. And then we drop off a little bit here to the 48 puts, so a little bit tighter, a little bit pretty much at the money puts. Now about 27,000 contracts of those, including about 13,000. Again, you guessed it on Wednesday. The lion's share of those coming in clean Thursday, about 10,000, about 2,500 or so of those opening on the week. So a little bit more open in paper on the 48 puts. And then we go down again, 45 puts. That's usually one of our leading strikes, and it's up there again today with about 26,000, including again 9,000 on Wednesday and about 9,000 again today. So a hot action out there on the 45 puts. If you're looking at some of the put action side, that's where the action was. Of course, not to be outdone, it wasn't all front month. No, not by a long shot. We did see some paper out there. It looks like in October as well, with the August as well, with about 50 calls coming in here for about, about 14, nearly 15,000 of these lighting it up this week, including the big, again, Wednesday, the big day out there, about nearly a little over 9,000 going up, and then about 3,000 today. So 12,000 of that 14,000 and change going up in those two sessions, about 2,300 of that net closing on the week. So again, a lot of back and forth, a lot of Sturm and Drang on these strikes. 50 strike also out there in September, about 10,000 contracts lighting it up. And not to be outdone, a little bit longer term, Put Love, the Dees 2017 40 puts lighting it up to the tune of about 6,200 contracts. So there are some people out there who are speculating. I saw some great charts out there this week about, the coming demise of oil and what happens if U.S. production kicks in and these alternatives kick in and all these different levels of crude as it keeps getting hit down. Maybe someone who's buying that argument, loading up on a ton of the 40 puts. They were net opening on the week, including about 3,000 going up on that Wednesday, about 1,500 or so today. So pretty scattered paper, about 6,200 total on the week. So, and also, if you want to be, I want to be outdone. Maybe Nick, this could be one of our candidates for, I don't know if it's crazy trade of the week, maybe weird trade of the week, call it what you will, but there was some longer term upside, longer term crude love as well, which came in the 70 strike out there in June of 2018 with about total of about 2,300 of these 70 calls, including a good chunk going up on Wednesday, 1,300, and then the next day, 1,000 coming in to close. So it's kind of interesting about a little back and forth churn on these June 70s. Maybe someone decided discretion was a better part of valor after some of the movements and the sell-off we saw this week. Either way, net pretty much unched open interest on the week out there. So interesting stuff out there in that strike. It's worthy of note, the 60s out there have about 21,000 contracts net open on them. So that's probably the more, not this week, but in general has been the more active strike. Makes sense, a little bit closer to the at the money. So you got a nice little diversity of opinion out here, Nick. Longer term, you got someone loading up on the puts. Longer term, you got someone loading up on some calls as well. Front month, it's kind of all churn and burn, all across 50 strikes, 45s, 48s, 47s, puts and calls. All of them kind of going back and forth pretty aggressively, which we like to see on a show like this. It makes for a pretty healthy market. What caught your eye out here in crude this week, and what was lighting it up out there in the quick skew numbers, sir?
Yeah, so the one thing that you won't be able to see on the chart or on the table right now is the weekly that expired today, because it expired at 1:30 Central Time, and it rolls off the report, and I didn't unexpire it to let it be back in there. But what I was glad to see is there was some follow-through on the weekly volume that we saw so prominently last week with the LO4 contract for the OPEC meeting, and we did have a fair amount of volume in the LO1 or the week one option that expired today. So that was something I was trying to keep an eye on as well, and I think that's something we'll have to try to make sure we pay attention to and mention to see that those weeklies are starting to get a little bit more attention than they have been in the market. And I think the more there are things that are being reported, or storage numbers or EAI reports, or the OPEC's not going to be for a while, but anything else that might have some volatility in it during a given week, we're going to see those numbers continue to kind of increase. So I was really excited to see that continue on. Now, the other weeklies, they didn't have so much going on, but I think what we're going to see in that weekly is we're going to see that front weekly is the one that's going to get a majority of activity, and then the other serial will probably, or the true front month, as you want, if you want to call it that, will get the rest of or the rest of the activity. As far as anything interesting, from a volatility standpoint, we did see things pop, and I think a majority of that, about a third of it came today, from what I can see on these numbers. And then as far as the skew goes, nothing tremendously interesting out there and quick skew. So we're seeing pretty much the same kind of shape of the curve that we saw at the end of last week. So again, we mentioned last week, we had 4 or 5 strikes that we talked about. We talked about obviously the 40 and the 40-60, the 45-55, and then we obviously had the 50 strike, but we did mention the 47 strike in the front contract did have quite a bit of open interest. It was actually the higher put prior to the 45, not including the 40. So, we're trading around that. That's going to start churning out. It's going to become trade more like an at the money, I think, now that we're down here. But we're going to see a range here. I don't think, like you said, I think our range, I think we can say fair enough, our range is 40 to 60, probably 40, 43 or 44 and a half to 55. I don't think anything's going to push us through 55, given what's happened in the meeting last week, and then the reactions that we had in the market, and the rhetoric from the producers, or from the people that watch the producers. So we're going to be in a range where I think, volatility is I don't see us getting much of a pop. We're going to get these sort of intra-day, intra-week pops. I don't think we're going to see any long-term pops. If we rally back up again, it's very possible that we can see it come right back where we started the week. But again, with all that said, if you're trading around the money, you do have an opportunity here. A 4% move is a 4% move. It doesn't really matter if the volatility stays flat and you have a 4% move, that means you basically can make money on that trade, right? So there is that possibility to scalp that if you are paying attention to gamma and watching your deltas and doing what's necessary to hedge your position. So that's it. Quick skew, nothing tremendously interesting. You got all the volume numbers down. It's interesting to see the 60 calls and the 70 calls print out there, even though a lot of them were closes, but still trading. So the wide range in strikes is always good. It would be nice if we actually traded this 45 to 55 range. I think vol would stay pretty steady, get firm, and people would be pretty interested in the weeklies, even, because you start to get the real bang for your buck if you can get some activity in a nice range like that with some short dated options. So that's about it for crude, I think.
Yeah, an interesting week for crude. It wasn't, for once, it wasn't our lead-off product, kind of mixing it up a little bit. You guys always write in with crazy questions and suggestions for what you want us to talk about. In fact, let's get to some of your crazy suggestions now, because it's time for the Futures Options Feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options. Facebook.com/The Options Insider, StockTwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody. Welcome to the feedback portion, the portion of the show where you guys get to take the reins and pull us pretty much in whatever direction floats your boat. A lot of you guys chiming in with different ideas and suggestions and levels for where things should be trading and a bunch of other fun stuff. Let's start with, let's get a comment here. It looks like Javier LBC. He just wants to chime in with some SPX love or just some S&P love in general, really saying, hey, I think S&P is going to 3,000. Well, okay, there you go. Maybe you're out there then loading up on some of these far out of the money calls. If you believe that, maybe you should be doing that. Maybe be a little bit more responsible. Do a few verticals, maybe finance with some puts, things like that. So you don't just go broke buying all these calls and waiting for this mythical, magical 3,000 level, even though it isn't as far out as it may sound. So Javier in the bull camp. Production one chiming in. Remember we were asking on the last show, Nick, what do you guys want us to talk about? I mean, we always talk Crude and a bunch of other ones, but we like to mix in some other names. What other products are really on your radar? What are you guys trading? He chimed in with Bellies. I'm guessing he means pork bellies. I think we can do lean hogs. I don't think the bellies are really up there, Mr. Nick. Do we have those listed in Quick Strike? I don't see them.
No, they were traded. I remember listening to WGN as a kid as I was getting a ride to school or doing something early in the morning with one of my parents. And I don't think the pork bellies are listed anymore. That's probably the best we could do is the lean hogs. But I'm looking at Investopedia, and the bellies are a cut of the pork that comes from the belly of the pig. And it says specifically pork bellies were traded in the futures market because they were important components of meat products such as bacon. Everybody likes to talk about bacon. It began in 1961, but I don't believe they trade anymore. And I think they halted trading in 2011 in comparison. I'll tweet this link out since bellies seem to be of interest, and maybe somebody can find some interest in this little blurb here.
We're talking bacon. I like bellies. It. Yeah. I like it. Let's have a bacon block. Let's just talk bacon. I like that idea on the show. We get Oscar Mayer come in, sponsor it. What do you think? You on board?
That's what Twibo. I think we do a Twibo, right?
This week in bacon. I guarantee you that would do huge numbers if we do this week in bacon. Talk about the different cuts, thick versus lean, smoked, non-smoked, maple. I mean, you can go for weeks on this stuff. I think in trying to suggest a product, he actually suggested a whole new show for us. So well done. Unfortunately, no bellies. That's old school. That's all kind of. Well, I think they may have touched on some bellies in like trading places. I know they did FCOJ. I don't know if they did bellies, but that's kind of that era. Unfortunately, not a lot of bellies slinging around. Talk lean hogs if you want. No belly love. Speaking of love, Contango Trader, he's got some umbrage for us. He's like, what? No Bitcoin love, because we gave some samples of products, and Bitcoin wasn't in there. I guess he didn't listen to the show last week, Nick, because we did give Bitcoin. Bitcoin's got love on the last couple of shows, actually, quite frankly. Sure. I mean, we talked a lot about Bitcoin. We talked about how CME is adding those new patents to try to get more products traded, including a digital version of gold, effectively using blockchain, which is, of course, the underlying technology of Bitcoin. And the Bitcoin derivatives, they're trying to list options on those, trying to get a nice centrally listed, kind of cleared market for those. So there's clearly demand. We talked about him twice now, and I guess this week that makes three, Nick. So I guess he has no right to take umbrage, sir. We talked about it a lot. Would you agree?
Yeah, no, we did do, and I think I mentioned that we're going to try to get some Bitcoin stuff out there. I just got access to that information, so we'll try to. I don't think we're going to be able to do too much because it's just an index and another number, but we'll get it out there so you can at least see it. I mean, I'm sure there's plenty of places to see that kind of thing, but like we mentioned last week, and we did. I remember we specifically talked about how it would be a great product to trade because you have massive ranges in the thing, and you got participants all over the place, and it's basically a undeliverable. But I would imagine it's just going to go to an index, and you'd be cash settled. But something that moves around a lot, that's cash settled, that trades 24 hours a day all over the place, which is most everything now. But that would be a pretty interesting product to start. You don't even need ETFs anymore. You just have a Bitcoin, right? Because it's just everything everybody wants.
There you go. I mean, we're talking, everyone's wringing their hands. Where's the vol? Where's the vol? Got a nice little bit of shot in the arm of vol this week in Crude, but I mean, Bitcoin is nothing but vol. So it's scapping all over that place, partly because it's not really listed in a kind of centrally listed type of form that's with a deep liquid market behind it, hence the gaps. But still, so maybe we probably would see some of that tamper down a bit if we saw it listed at a place like CME. But still, it's worthy of note. And anyway, everyone wants a hot new product, so yeah, let's get it going. Bitcoin love all day here on TWIFO. We're going to call it the TWIFO and Bitcoin show going forward. So all you hardcores out there, TWIFO, Bitcoin, and Bellies. What do you think, Nick? That a new name for the show? You like that?
Well, we can go, instead of Twibo, we can go to Twibo, which would be This Week in Bitcoin and Bacon options, right? So we can do the double B. So we'll get everybody happy at once.
Bacon and blockchain. There we go. New name of the show.
Like bacon and, hey, that's a good way. I like that. Bacon and blockchain.
I would listen to that show. That sounds pretty interesting and or disturbing, depending on how you're listening to it. All right. More of you guys chiming in. We got Elmman. Elmman says, can you guys talk more FX? In particular, he wants pound dollar and euro dollar. Well, yeah, sure. I pulled it up for you right now while we're talking. You guys can do all this yourselves as well. cmegroup.com/TWIFO. And we'll do a nice cold read here of the numbers, see how it's looking. It was a net small movement, but again, you're talking small moves in these things anyway. The FX, you're not scalping huge swings in the underlying. Typically, you're talking very small movements. You got these crosses and triple crosses. You have to small movements is where the action is out there in crude, in currencies. That's what we saw this week in euro dollar, up slightly on the week. What's interesting, I think worthy of note too, the volume actually pretty strong this week. Open interest up 13%, so a big surge out here this week, no doubt. Was part of all these macro stuff. Trump was abroad, focused a lot on the macro, a lot on the dollar this week, and so Fed's on the horizon as well. So all these things driving some action out there in the currencies as well. The vol, kind of a mixed bag, kind of unched up slightly, down slightly, depending on kind of where you're looking out there in the term structure. But what's really interesting, what kind of caught my eye, Nick, and it probably caught yours as well. We're always talking about these products, where's the love for the weeklies? Where's the action in the weeklies? Well, it looks like euro dollar, that's where some weekly action is. In fact, the number one month out there is actually the month is the week one contract. That's where the lion's share of the action is, about including the number one hot strike for the week, the 1.13 call out there, doing about 3,200 contracts, including 1,100 today, and 1,200 on Wednesday. So if you're looking for a weekly that's active, in fact, I think we have a question later about where are some hot weeklies. Looks like the weeklies in the FX, in particular the Euro USD, looking fairly active. That was number one by a large margin out here. The 1.13 strike, 1.12. Again, these strikes are kind of funky. Tying with that and the 1.12 puts. Also doing about 1,800 contracts each, so maybe a bit of a straddle or something going up on those strikes when you see such similar numbers. It also always makes me wonder. And then kind of falls off a little bit from there. Did see some longer term paper out here as well, including out here in November, the 1.09 puts, about 1,200 of those, lighting it up. So a lot of interesting kind of diversity of paper across the realm. We got some longer term paper, got some weeklies. I don't know. I think it's an interesting product out here. For a long time on our network, the currencies were kind of just the death knell. There was nothing going on out there. Certainly was no volatility. And it seems like in the last few years, certainly post-Swiss franc and now, of course, post-Brexit and post-Trump and everything else, we've seen a little bit more life, a little bit more vol coming into these currencies. And certainly some action in the weeklies as well. So interesting stuff, Mr. Nick. Maybe we look at these more again in the future. What do you think? Certainly, I think, what's the name? Elmman would be excited if we did that.
Yeah, we could. I think this probably has an opportunity to see some event volatility take place. I mean, we did talk about this early on when we were looking at the Brexit, like you mentioned, and I think there's probably other places we can dig into and look and pay attention more to what's going on globally to see if we can pick some weeks where this makes more sense. But I think the one thing I did want to mention about the FX, and some people might know it out there, some might not, but the final American style option will expire next Friday in the CME FX products. So that's the June contract. All other contracts are now exist within what they're calling the 2 p.m. fix. And that's a European style option, and that's where the majority of the trade is. And there's also a 9 a.m. fix, which is a European. Everything's European option now on the currencies. But the 9 a.m. fix was present for those people that were trading overseas. So their afternoon, our morning is their afternoon, so they could trade their close basically. But the 2 p.m. fix, which is our obviously close, are the most liquid and the most active. So final week for the June American option, then that product will be removed across the board in Quick Strike as well, and then you'll be looking at the 2 p.m. fixes. So something to keep in mind. I mean, outside of here, I think we probably have a pretty good chance of seeing some interesting fluctuations in the skew here. And we'll have to pay attention a little bit more. I don't see anything too interesting. Kind of a flattish, not too flat, but puts are rich and calls are a little bit cheap, but nothing tremendously interesting. And you're seeing even some where it's actually almost a perfect smile in that. So we'll have to take a look. And I guess just looking at the report right now, if you go down the list, you can see where you actually get a smile in the August contract, but then you get a tilt. So there might even be some calendar spreads that we could take a look at here. So yeah, Elmman, we appreciate that. And like Mark said, the weeklies are active, and I think their weeklies are also active in the pound. So I think you're gonna maybe you'll hear more from us on the currencies. I'll have to start paying a little bit more attention.
Yeah, it's interesting to see that exactly what's going on out here in these products, and particularly in the weeklies, and especially, I think you're right. I think we'll definitely be getting into FX more on the show. In fact, we're getting into some areas of that now with the next question kind of plays off the last one. We got this question here from Lezen. You got some weird handles this week, Nick. Lezen, he or she wants to know which product has the hottest weekly options. So doing a nice little hot weekly option breakdown here on Twifo for this week. And, it's interesting. We were just talking about the Euro USD doing more weeklies than we probably thought, which is interesting. But of course, it doesn't hold a candle to what I would assume, and I'll have to look at the numbers to make sure, but I would assume the lion's share, the leader, it's got to be out there. When you're talking, weeklies, there's so much interest, there's so much action out there in the equity indices that you got to really kind of just start and end there. We know S&P lights it up and most of the other indices do as well. Just for whatever reason, the use case really seems to be out there in spades. In fact, I'm looking right now here in the E-mini, which is, of course, a big volume leader. And yeah, the weeklies, the front week is the close. It's tied with the monthly, a little bit less for the number one strike. The hot strike was, looks like the 23 half put doing about 28,000 and change. Actually, that might be, that's a monthly out there in June. And then the front week, though, doing about 24,000 almost of the 2,400 puts. Not quite the 3,000 level that our friend Javier LBC wanted, but still a pretty aggressive number. So yeah, the weeklies are just lighting it up out there in the equity indices. They're really it's a clear use case, and it seems to be the lion's share of it does seem to be premium selling, premium harvesting. People just love them for that. Of course, on the futures option side of the fence, people tend to buy these things more than they do in other areas as well. So we're seeing people coming in and buying some of these puts and calls to hedge around certain event risk, and that certainly was the use case for what weeklies were designed for. So it's good to see them being employed that way, not just to harvest all the premium they can, but they are a great theta decay harvesting tool if you know how to do it and do it right. So I'd have to say the weeklies. I did pull up, Nick, while you were talking, I was looking at the questions. I did pull up just to kind of see, just for my own edification, I wanted to see what the Eurodollars do, because Eurodollar obviously lights it up from most of their contract perspective. That's a really active contract. But I looked it up just now, and not really lighting it up in the weeklies out there, which is kind of interesting. So maybe a bit of a use case issue there with who the end user of the Eurodollar traditionally is, more institutional, a little bit longer term. And also we've lamented, wrung our hands many times on the kind of lack of love out there for WTI weeklies, even though as our friends over there at CME, they sent a chart last week to kind of show that has improved. The ADV is kind of, I think, doubled over the last 6 to 12 months. So that certainly is a good trend. It's moving up, but again, it's a small number to budge, so you can easily double that pretty well. And they seem to be doing that. So slowly but surely, there's life coming into the WTI weeklies, but nothing, at least right now, can match, unless you got some esoteric product in your back pocket, Nick, that I'm not looking at right now. Are you on board with my love here for the E-minis and the weeklies, or you got something else that's eclipsing them?
Yeah, I think I agree with that. One thing to keep in mind, and that's why we talk, we go back and forth with each other. Pardon my phone ringing in the background. One thing to keep in mind is that the S&Ps have weeklies now, but those used to be the old serial contracts, right? So there's 5 or 6 of those that are trading that they call them weeklies, but they're actually the serial contracts. So I'm not
I'll take a look, and maybe next week we can talk a little bit about which ones those are specifically. So all the serial months got moved to that style. So that's one thing. But yes, the weeklies are very popular there. Obviously, the treasuries, they're the 10-year in particular, super popular. So there are plenty of opportunities out there. And the Eurodollars, those been out there for a long time. We didn't have those when I was down there. We just, we went from whites and reds to the three shorts, three groups of shorts. But no weeklies were out there. But those have never done anything in the Eurodollars, and probably because I don't know. I have no good exact reason for that, other than probably people aren't really. That's not really a short-term thing most of the time. I think you can get away with whatever because the FOMC 6 weeks spread apart from each other, and maybe it's just that, when I was we were making, I think, markets on 40 contracts. Now there's double that number of contracts. And now you got the weeklies on top of it, and frankly, the markets just don't move that much. You don't have the range in the underlying to really support that kind of heavy decay option, because you get more like a push up or a push down, and then you sit around. So I don't think there's much love, or will be much love, for those out there. And the one thing I did want to mention too was we have for free on the CME Group website, and I tweeted it out. It's called the Daily Weekly Options Report, and it's basically just lists any product that has weekly contracts, and you can go through and get a nice open interest and volume report on them, or a volume, and it'll show you everything that's out there for each kind of product. For each product that's out there. So only products that have weeklies will be listed, but you'll have a nice, easy report that you can go run through and take a look and see if anything's trading, or if there's anything available for that product. So the Daily Weekly Options Report, you can get that at cmegroup.com/quickstrike. It'll be in the big list of tools that are available. But I agree with you, S&Ps, then the 10-year. And then I think we're going to start to see the crude come around here a little bit. I don't think it'll catch the other ones, but I think it's going to be interesting to watch that progression.
I think we got time for one more here. Let's do a nice quickie here to wrap it up, Mr. Nick. People firing off this week. Lots of good comments and questions and insights. Keep them coming. We love to hear from you guys. This one comes from LJack. He's talking about what you talked about, I think, on the show last couple of times, Nick. He says, I heard you guys mention CME Direct. What the heck is that? Is that a broker? So he's a little confused. Nick, you played around with this quite a bit. You talked about it on the show before. Why don't you set Mr. or perhaps Mrs. LJack straight? What the heck is CME Direct? What can you do with it?
Well, CME Direct is the CME Group's trading platform, and it is not a broker. You can tie it to whatever FCM that you have for your trading purposes, but it's just a front end that CME has made available to people to trade, and it's a really nice platform. It's the UI's come a long way since the beginning a few years back, and so the other nice thing about it is there is a version of QuickStrike that's integrated into the platform itself. So not only do you get a nice trading platform, you also get some of the nicer tools from QuickStrike for free embedded as part of the tool. So you can go to cmegroup.com/CME Direct, or search for CME Direct on the cmegroup.com website, and you can learn more about getting that. And that installs, you can get that install. You just have to register, and they'll send it off to you. And then there's also a part of that platform is called CME Direct Mobile, which will tie to your CME Direct setup, so you can trade on the go as well.
There you go, Mr. Nick. Good questions, everybody. Well done, everybody on the show. You really brought your A game this week. Oh, kicking in hard there. Unfortunately, that music means it's time for the end of this lovely sojourn through the world of futures options. What a sojourn it was. It started in silver, got into platinum this week, Nick. Who thought we'd go there, of all places? And then we stopped off for our old friend Crude. Got into a little FX, actually. Got into a little bit of some weekly options and a bunch of different products. Got back and even talked some Eurodollars, other stuff. It was a good roundtable of a product smorgasbord this week, if you will, Mr. Nick. So a lot of good stuff. If you want to stay on top of everything we talk about when the show's not on, of course, best place to go, cmegroup.com patreon.com/TWIFO and check out those reports. They're live all week. The links that you can click in to get a little bit more info, those aren't, except I think they're live through Sunday, actually. Maybe Nick can clarify that. So you actually, it's not just showtime. You get a few extra hours. They're nice to you there. But the reports are live all week. Just change the settings to configure it to whatever week you want. You want this week, you want last week, whatever this week in futures options you want. Just click on it and you can get that report. And of course, you can always find the show to stream it live, iTunes, TuneIn, Stitcher, theoptionsinsider.com, wherever you like to go for that kind of fun stuff. And Mr. Nick, before we go, sir, what is cooking in the land of all things Quick Strike?
Let's see. Well, first off, I think shout out to Mark Clyde Bryant, who asked the Bellies question. I'm sure, watching him on Twitter and seeing, I'm sure he was joking around, but still, we learned a little bit about Bellies, and it was fun talking about it.
Oh yeah, I forgot Bellies. Bellies on the show this week too.
Yeah, and Bellies, the extinct, no longer trading product. It used to be at the CME. What's going on? Let's see what's going on. More of the same stuff. Doing a build this weekend, so we'll have some new tools that'll be out there. I'll elaborate on those a little bit more next week because I think they're just sort of a private install right now, but there'll be more Treasury Analytics tool coming out pretty soon, and then a few more functional tools that you'll be able to use off the CME Group website in terms of expiration calendars and block trade information and signing up for alerts for that kind of thing. So it's going to be a busy summer. So keep an eye out, and we'll keep talking about it. And, make sure you visit the reports we talked about, the TWIO report, as well as the daily, weekly options report, since we've been getting so much chatter about the weekly options. That's a good place to start. So at least it'll give you an idea of what looks interesting from a weekly standpoint.
And stay tuned for our new show coming soon, Bacon and Bitcoin. You on it with me, Nick?
I'm ready. We can go with a different version of bacon every week. We'll get at least 16 weeks of shows that way.
At least a few months. We get Oscar Mayer to come in, sponsor it. It's all good. Lifetime supply of bacon for each of us. What do you think? We'll be dead in a month, but it'd be a fun way to go. And then, of course, in between that, we'll talk about whatever crazy level Bitcoin's at that week. What do you say?
I'm in.
I like it. The Bacon and Bitcoin show coming to you next week, in addition to TWIFO. Why not? We'll mix all those together. Of course, thanks, Mr. Nick, for joining me on the show. Check him out over there, Quick Strike. Check him out over there, our friends at CME Group as well, cmegroup.com/TWIFO. And on behalf of Mr. Nick and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, sending in such great, many, and varied suggestions for products and everything else you guys like to send us. Keep those coming. And we'll see you next week for more of This Week in Futures Options.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quick Strike has you covered, with market data reports ranging from open interest to the term structure of volatility. Quick Strike is the perfect addition to your trading toolkit. Learn more about Quick Strike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.